Okay, welcome everybody to this evening's AUDJPY Securities webinar, Forex Trading Live Market Analysis. My name is Duncan Cooper. If you could, just read through the disclaimer. Now, as you're going through the webinar, just type your questions in to the chat or the question box. If you're on our YouTube live stream, I can't see the chat, but you're more than welcome to join us in the room, in the webinar room. Just follow the link I've given you, or you can just watch on YouTube, but I can't see the chat, so I can't answer your questions. All right, so everybody, just read through the disclaimer. All right, let's move along. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at AUDJPY Securities. And I'm a full-time trader in trading the Forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is on screen. Just send me an email. And through the week, you can get me at our website, acy.com, the Market News tab at our YouTube channel, AUDJPY Securities Australia. You can connect with me personally if you wish on Twitter and LinkedIn. You can connect with me in our Telegram channel. Just contact Nathan Bride to get access. His email's down the bottom. I'll put it in the chat momentarily. If you want to get access to my chart layouts and templates, then just contact Nathan too. He will set you up. So if you've got friends and family interested about trading, learning to trade, the webinars are free. There's no charge. Don't need to do anything to come along. So if you've got people that may be interested, just invite them along. The more the merrier. All right, I'll just put Nathan's details in the chat. And if you've got any questions about account openings, then he's the person to talk to as well. I should give a shout out to, just bring this up once more. Next Monday, if you're an account holder, you have the opportunity of attending the Inner Circle webinar. You speak to Nathan. I don't have anything to do with who comes along. I'll just turn up and have a chat. So we talk about your trading, how we can help you. Next one is on Monday the 16th, next Monday, 8 p.m, I believe. So just contact Nathan and he selects who can come along. Usually it's a different set of people every time, but you do need to be an account holder. So just contact Nathan and inquire how you can get access. And I'd love to see you there. All right. Let's get into the news first of all. Let me just get rid of that screen. So the news for the week, there's a few high impacted news items coming out. One, these are Queensland time. So one on midnight Queensland time tonight. Fed Chair Powell speaks. Not exactly sure what he's going to be talking about, but he may well say something that can drive the market, especially when we've got CPI data coming out Thursday evening. So yes, Fed Chair Powell talking tonight, and then we've got the CPI data on Thursday evening, which is going to show in all probability year on year that CPI data is dropping down by about 0.5%. So the market is going to be looking, so market will be obviously pricing in what we are seeing here. So we'll see what does get said, at least. So it's going to be difficult holding through that, especially if you're wrong, because it will go berserk, I am sure. All right. We do have the Aussie CPI data coming out tomorrow morning, but it won't be as many fireworks as in the evening on Thursday. So we're expecting CPI inflation to rise up to 7.2%. So, if we do get a good rise, then there's always that chance we're going to get an interest rate hike again, for sure. For mortgage holders, we don't get one in January, so you've got relief until February. All right, let's get to the charts. I'm just going to go through my price action charts. So I might flick between both sets. Now, let's just start on the dollar index. And we are trying to slip below this monthly level of support at the moment. Now, whether or not we'll be below that come the end of the week. Predominantly, though, the strongest pair to the US dollar at the moment, so over the last day or two, has been the euro dollar, and that makes up 50% of the dollar index. So that's why that is below that level of support, because the likes of the New Zealand dollar or the pound dollar, they haven't taken out their recent highs. Yes, the Aussie has and the euro dollar has, but some of those pairs to the US dollar haven't. So, yes, it's below there at the moment. How long is it going to hold below there long term? That's what we'll have to watch. So this weekly trend here at the moment, still coming down to make a fresh weekly low here. Maybe a lower top here now for me. And on the daily, it's still rather consolidatory. This could all end up with a false break, because we were, until Friday's data came out, where I think it was the ISM manufacturing data, which showed contraction, we were putting in a higher top. So it's very difficult to trade at the moment, where you're starting to get signals that maybe the US dollar is showing strength once more, and then the US dollar comes out and sends it totally the opposite way. So it isn't easy at the moment, because you're doing your analysis starts to maybe show a change, and then the news comes out and totally destroys whatever change you're seeing. So we have a low here and a low here. This could false break and move back above 103.82. So it is slightly down at the moment, but still rather consolidatory and false breaky. And the S&P 500 is popping back up the other way at the moment, but it's not going anywhere fast. And this movement up here yesterday is only getting pinned by this level of old support there. So the market is waiting for that news item, okay? That's the thing. So let's have a look at, just going to quickly click through my 15-minute charts. Just want to see what's been going on over the last half an hour. See where I start. Or I might start on the euro yen, euro dollar. So this is my look of the euro yen at the moment. On the day chart range, last week it was holding all this resistance area, but it has managed to pop up yesterday with the euro dollar moving up. So this has popped up to the 79% level. Is it failing at the 79% level to put another movement down? So 79% pattern there. Over the last couple of months, the yen pairs have been performing quite nicely with a 79% pattern. So is that what's happening? So whether you're going to trade the 79% or close to, stop above the high. Whether you look for a tighter entry. So you can see there we failed there yesterday once. Today, early, Asia. We try to get up to 142, and then we have moved back below. So are we failing at the 79% level? So can you get a tight entry maybe? Tight trend line break up here? Can we get a bit of a pop back up, tight entry, trend line break at the 79% level? Now, that's where it's failing at the moment. It may not fail there. Of course, you can trade it there. You could be wrong. The next level to watch on that pair as well would be this weekly resistance level at 142.55. So currently it is holding at the 79. But it may come up to the weekly level. It all depends what the market wants to do. So Cameron, you're saying you're looking for the 4 hour to break lower. At the moment, if you're looking at the 4 hour chart, you can see here that the 4 hour structure is still up. We might get a 4 hour rejection here at the moment, and it breaks the candle low to give a 4 hour entry. Or you simply wait for the structure to break down, and then you look to sell a rally on the 4 hour chart. So it depends how aggressive you are. Aggressive is selling, close to 79. You could be putting your stop above the high, or you could be waiting for a trend line break, or you wait for that 4 hour structure to change. All right, so, but it is at the 79. It's just a question of how you want to trade it. Now, let's go to the weekly chart of the euro dollar. That's the range for last year. We're headbutting straight into the 62% retracement of the range of last year, fib level of range of last year there. Now, I know the weekly's up there, it's putting in another higher bottom, or minor high bottom there, minor high bottom there, so another high bottom. It's obviously testing that weekly top. Okay. And I mean, last week it was showing a lower top, lower bottom, saying to us we're going to be topping out, but of course the news keeps keeping on our toes. But we could still fail here. There's a kind of a triple top, almost a quadruple top area over here from last year's trading. That could certainly hold the market. So at the moment, it is just keeping underneath that top just there, 107.36 just. Is that where we hold and move back down? I can see a very large imbalance on Friday that maybe needs to get filled. So even if the trend doesn't turn to down, filling that imbalance would be like a 62 to 79% retracement. Before then it could turn back around. So there's a high probability that the imbalance could get filled there. Now it is holding at resistance. So after the Fed has his bit of a talk today, maybe there's a bit of weakness coming into the market. You might see a setup trade down from that 107.36 level. It'd be great if the market started to break down and wanted to get back below that lower top we formed last week. Or so we formed that the week before, just before we opened then the next week. So, if we can get back below that level as well, that means the market can't hold above two significant levels there. So it's starting to fail. That was the spike up when we had the interest rate decision from the Eurozone back in December. So that's the key top for sure that the market's referencing. So, this isn't where I want to buy. I'm going to buy at resistance. I'm not going to buy at 62% major level. Sure, I could be buying on a pullback if we got a significant pullback. So buying at the moment, I don't think is the thing to do where it's positioned. It's just a question of, does this trend that we're seeing falter here at the top, or do we simply have a pullback and then we carry on? So I'd be monitoring a pullback at the moment, and I'd also be monitoring maybe a tight entry at these resistance levels to trade down. We're just going sideways here at the moment. So over the next 24 hours, if we start to fail in this area, start to move below 107.13, we may well then be moving back below 107.100. And then, can you construct shorts? Tight entry to the downside. Do bear in mind, we've still got CPI data coming out. So it's, might want to be out of the trade by CPI data time. So we may well see a break of structure here on the 15-minute chart to the downside. I would be asking myself, can price break below 107.13 today? Can that become resistance? Cameron, you asking me, is that for a bank trap pattern? I'm not sure what a bank trap pattern is. Do you mean all the large traders up here waiting to sell it? And now you're telling me a breakdown after the range then goes up. You mean this pattern down through here that happened last week? I don't know. The market's reacting to the news. I mean, when we had the job figures come out on Friday, we were all the way down here, pretty much, looking real bearish. So I don't know. I mean, it's always hard. The thing that I will be watching in terms of a bank trap is this is a significant top here. So for me, the people that are buying up here at the moment in this area are retail traders thinking that, okay, we're breaking above this top. I may have been short, so I'm getting out my short. I want to buy because we're above the top. So all the buy orders above here at the moment are the retail traders. So the people that are selling up there are the larger traders. All right. So to me, that's just buy side liquidity up there. That's not where I'm going to be opening a buy. That's where you know, institutions are probably selling. All right. So, I mean, over time, 107.36 could become support, but what we need to see, first of all, you know, if we're going to continue up for the next month or two, well, over the next 2 weeks, week to 2 weeks, we need to see price move nicely above here, and this area becomes support. And you see price want to hold on top to move up. Now, we're not seeing that at the moment, so that's why it's not the area for me to be a buyer at the moment. I need to see a structure that starts to tell me, okay, that area is being support rather than being a high probability resistance level at the moment. So we could well pull back. If you've got a very bullish bias in your mind, then, you know, I'd be monitoring a pullback to a 62 or a 79% level. 79% level lines up perfectly with where this imbalance finishes. So don't know whether it can give you that level to trade from, but that's where I'll be looking to be a buyer if we can pull back to that area. All right, let's have a look at, we'll just go from the left-hand side now, Aussie yen. All right, day chart. Now this has been working nicely to 79% retracements for the last couple of months. Didn't on Monday manage to hold at resistance here, it popped up. And I'm going to go through tomorrow the monthly ranges, and go to 4-hour chart on my charts. Here's the 4-hour range. I'm going to go from that swing point now. And we're not quite up to the 79% of the monthly range. But if you take that range, we're a lot closer. So we haven't quite got to 79. Maybe we're just failing. Come back up to the top of this very large drop candle here. So the whole concept of filling the imbalance, there's the imbalance. Where are we topping out at? At the top of the imbalance. All right. So I'm going to watch this range, the monthly range at the moment. I would just like to see. This 4-hour is still structurally up at the moment. It could get support through here today. 4-hour trend is up. This is a level of what was resistance. We're moving back into possible area of support here at the moment from this level here. I think that's a weekly level of what was resistance. So we could hold on weekly support now. It could be support now for a movement up. So the area I'm watching, and it just depends whether we can get up there, is this area here. 79 level, 92.38, 92.59 resistance there. So that's a monthly. From the monthly range, it's a 79% level. Now, we might not get up there. I might have to then start to rethink about what I want to do. But structure's still up here on the 4-hour at the moment. Now, dropping down to a lower time frame. This 4-hour structure holds today, you have a 62 level at 90.88 and 90.82 is weekly support. Where we've held today already, so you can watch the area. Now, if we start to turn around, trend line break to the upside, we're probably having a continuation pattern there on the 4-hour charts. All right, but I'm watching the higher level for an opportunity to trade down up here. If we can get up there, we might, get up there with whatever the Fed says today, or whatever the CPI data does in a couple of days' time. That's a higher area that I'm watching. All right, Aussie dollar. Now, I saw this thing had topped out last week with this lower bottom, but we have traded above last month's high. This is the major range at the moment. Just short of 79. Well, we are now, but we've tagged a 79 yesterday and today. I mean, the daily trend is up. I think at the moment, it's not the best place to be a buyer. Very high up. But monthly resistance at 69.67. 4-hour structure still up. you know, if you think it's going to be moving higher, continue moving up, gradually grinding up, you want to monitor for a pullback on that 4-hour range, 62.79 level. Let's see if you're on the buy side. Now back to the day, if you're on the buy side, because you can see you got a higher bottom to a higher top. If you're wanting to trade the bigger time frame, this is the major range from the monthly. They have a monthly lower top there to a lower bottom, coming up to 79% of that range. Is this where it tops out? Coming up to monthly resistance here. So, you know, depending on what time frame you're using for your major trends, are we coming up to finish the move up for a lower top to form on the monthly, or are we simply continuing this day trend up and up and up? So, I mean, this isn't the area where I'd like to be a buyer at. Start to see it turn. Yes, I'd like to be a seller. But the structure is still up. Now, I could look for a tight entry. This is last month's high. I could look, depends what happens through the week. This was to move below there. Last month's high. Last month's high started to be one of the resistance. I could look in that area on a lower time frame for an entry to trade down. Now, what I'd have to monitor is the 4-hour trend is still up. You know, what does it do at the 62 and the 79% level? What does it do at this area for our support through here? Right, so I'd have to monitor the lower levels in case it didn't want to keep going down. If you got a short on, if you got a nice short coming down here. So that top is at 68.93. We're at 68.93. So maybe we're just starting. Maybe we might see. Got the CPI data coming out tomorrow for the Aussie, but maybe we might start to see, depending on what that data is, that 68.93 to 6900 becomes resistance for a movement back down that range. All right, there is, like the other pairs, there's this imbalance here. That potentially needs to get filled. See, when we had this very strong impulsive move up, we had an imbalance in here that was formed. Well, there was one in here. The imbalance on that last move up through there was kind of here. See how we were very strong moving up, very swift, and then we came back down to fill the imbalance. So market's often doing exactly the same thing all the time. So even if this stays in an uptrend, it will probably come down to fill the imbalance. All right. Covered the euro pairs, pound yen. Now, I'm not really sure of the long-term direction here at the moment. You know, is this inverted left shoulder, head, right shoulder? Is it getting ready? I know the weekly trend is down in the most recent price action, lower top to lower bottom, but the monthly is a higher top. Is it coming down to put in a higher bottom here? And if that's the case, we have got support between 79% and 62%. Well, it's definitely at support there. So we have, you know, a bit of a conflict. The monthly trend is up, the weekly trend is down. Has the weekly trend just been down because we're coming down here to put in this bottom, this monthly bottom? Now, if I see the day chart trend turn back to up, okay, I may start to think about, okay, the bias is back to the upside in line with that monthly. But at the moment, that daily is not changing trend. And it is a 79% retracement here at the moment. Now, I don't want to trade into support. Support is here, 159.72. So it'd be okay to, you know, if this was to pop back up to the 79% level, right, it's almost just popped up in the last candle, so you may have missed that opportunity. So even though the structure is up on the 4-hour, it does look like anything above the 79 level is just getting held. Just look left to your 4-hour resistance tops. That's where it's getting held at. So, you know, can it pop up to the 79% level? Can you get a tight entry up here? You need to be at break even by the time you come down to support in case it doesn't want to break. All right. Or you could be simply trading at the 79% level, stop above the high with the anticipation we're moving back down to retest this level down here. All right. So structurally, it's a 79% retracement at the moment. It is holding at some old 4-hour tops. I'll color that in. This is the 4-hour resistance area here at the moment. All right. That's where it's holding at. So resistance with a 79% fib. Are we starting to break down? Okay. Pound dollar. Now, I put this out in Telegram today. I'm still thinking this is a significant top. See how we were miles away from taking out that high, unlike the euro dollar. So that's the last year's range, filling at 62% of last year's range. I'm anticipating we might be coming up here to put in a lower top on the weekly. Just depends where it wants to put it in. It could come up to this level of weekly resistance at 129.93. I'm just monitoring the range where we are at the moment, holding at down the 4-hour. Fraction short of the 62 level yesterday. All that 4-hour resistance to the left here. So, you know, of course, we could move through there. We could come up to that weekly level. Let me just double make sure it's a weekly level. Yes, it is. It's weekly level. You know, areas to watch when the CPI data comes out and does its thing, depending on which way price goes. If it flies north, I'm going to be watching this area up here. All right, but we might not fly north, and we may be down here come that time. We may well be failing already at the 62 level to short and the 12200 level. So through the course of today, just going to be watching up here. Does price come up to that area and fail? All right. Price is definitely weaker today. Yesterday, it was nowhere near the central pivot point. However, today we have traded below the central pivot point. So there's no strong buyers here wanting to hold it above the central pivot point and move it further up today. So maybe we have come up to the level of where the sellers are. So it could come up to the area I'm showing you. Draw a fib just to, you know, look at this as a kind of a drop, rally drop. 79 cents at 121.95 as well. Overlaps with the pivot up there. So there's lots going on up there just as you head into the 122 level. Of course, we could blow straight through there. So I'm not going to trade that first contact. I'm going to let price hold start to turn. But if we see it starting to turn and get a tight entry, that is definitely an area where price could be faltering at, okay? New Zealand yen, still keeping its very much range-bound environment. Now, if I just get rid of these two lines, is it just coming all the way back up to the top? All right, daily at the moment though is still holding to a downtrend, and like the euro, or just say Aussie yen, euro yen, pound yen, they're all kind of coming up to the 79 levels. You know, I wouldn't trade all of them, but you know, maybe one of them you could go, you know, they're showing the same pattern. So if you wanted to trade one of them at the 79% level, pick the one that you like the better look of. This is more range bound because it can't break. It's not breaking down through the bottom area of the range. So maybe one of the other pairs is a little bit better. All right, so it's at the 79. You just have to work out, do you want to trade there, stop above the high, or do you want to structure a lower time frame entry? All these yen crosses at the moment are showing an uptrend on the 4-hour. But if they, you know, we get a break below a higher bottom, start to anticipate a movement back down the range. All right, New Zealand dollar. Had lower top, lower bottom last week. Cameron, you're saying on the pound dollar, why would you do a first contact entry there at the 62% fib level? Well, you could, but with that euro dollar being so strong at the moment and the dollar index going down to a new low, I don't know if I want to just short the US dollar when it's selling off here. Because if this has another very strong day down, that pound dollar will probably go higher. So what I'd like to see is if we get it into that area, I want to see it turn. And what I want to see is maybe the euro dollar turns and the dollar index turns up. Because at the moment, most definitely, we are seeing US dollar strength Friday, Monday, potentially into Tuesday. So I don't just want to, short this. This is still a strong move theoretically. It might be topping out here, but it might not. So I'm just going to let it show its hand a little bit. Otherwise, I can just get taken in and just go straight up the chart and takes me out. Now, if it was a situation where like the euro dollar was coming up to potentially put in a lower top as well, maybe I would look at first contact. But as the euro dollar, is taking out its high yesterday, I'm just being a little bit more cautious. But yeah, I mean, you could trade first contacts. All right, so New Zealand dollar. Now the New Zealand dollar, like some of the other pairs last week, was showing a downtrend. Then the US news comes out poorly, and we're back up here now. Posted this as well in the Telegram today. It's really the same kind of structure as a pound. Failing at the 62 level of last year's range, weekly resistance, so we're forming a double top up here. Is this just the last stab up here on the weekly chart to put in a lower top? That's what I'm looking at. So I'm monitoring that range. We're pretty much at the 62 level. All right. And yesterday, we really didn't like 6,400. We're struggling there. Got some 4-hour tops to the left here. So we've got 4-hour resistance in this area here. All right. That's where we failed at yesterday. Just above the 62, failing out the 6,400 area. Now, if we drop it down to the 15-minute chart, draw a fib across that smaller range. At the 79% level overlaps with the 6,400 level. 62 of the small range overlaps with the 62 of the larger range. So watch these fib levels. If we start to falter, I'm watching up at 6,400. See yesterday, couldn't really hold up there too long. See how we get, as we got into the later end of the day, we were just trading there to move down. So are we going to come up and hold? If we start to hold, you could get a tight stop then. You're holding at 6,400 stops, just goes a little bit above the high over here. And, could get a very small risk in pips. If it starts to turn over there, we could be having a 62% rally coming up to put in that lower top on the weekly chart, potentially. We're going to put a lower top in here to then move this way down. So we end up with a, yes, we've sold off. Yes, at the moment we're rallying. And then we put in a lower top here to come down this way. And then, we failed at the bigger 62 level of the yearly range. Then we're maybe failing at the 62% of that weekly range to turn the trend down this way longer term. Now, of course, the CPI data could blow this straight up and through there. Of course it can, but that's how I'm looking at it at this moment. So I'm going to watch 6,400. What is it going to do up there? All right, that's what I'm watching. Now, dollar Canadian. This is, if you go to your weekly chart, putting in a lower top. So that lower top, well, it's kind of mixed now. We've got lower top, higher bottom. So what is going on? That is the question. I don't usually trade the dollar Canadian. We have been discussing the possibility of a kind of a left shoulder, head right shoulder. The monthly trend is still firmly up. There's no lower top or lower bottom there. We're actually December and what is now January is trading within November's range at the moment. All right. So it is a bit range bound. Weekly, high bottom, lower top. I did notice today I was just doing a little bit of work on that range. Just below the 62 there. And I was also looking at the range the other way. That movement back up, fair at 62 level and weekly resistance. So which way is it going? Is it a lower top to move through the bottom? Is this going to put a higher bottom up here to move through that lower top? Which way is it going? Not easy to determine. If you're just using the day trend for your bias, it is in the downtrend on the day. So what would be nice to see if you want to trade with a trend is maybe it comes down a bit more. So you can kind of line up as, well, you're not going to be able to line up a 62% level with that resistance because price has to get down there. So that's not going to work. But what you might see, let's just drop down to 4-hour chart. You may see if this 4-hour trend doesn't want to change, then you know it is very much range bound. It's getting very swift movements down, swift movements up. This has been very swift down, so I'd expect another swift movement back up here. So if you want to be a bias to the downside, look for the 79% level. You know, if you want the bias to, if your bias is to the upside, this area here, this is actually last month's low. So if we start to actually hold here for a while, then it could actually put in a bottom here to come all the way back up to test last month's high up here. All right. So we've obviously been moving down from last month's high to challenge last month's low. If last month's low starts to hold, have an anticipation that we're at least maybe coming up to this level, but we could actually just keep going up to test the highs again because it is very range bound. Just think about the high and low of the month. That's, you know, the low of the month, that's as low as people were prepared to sell it at last month. So there's not going to be many sellers that want to sell below there at the moment. They'd much prefer to be selling up here again, not at last month's low. And as buyers are, well, this is the cheapest it was at last month. So this is where the buyers are going to come in if there's whoever needs to be buying US dollars, selling Canadian dollars for whatever reason. Well, that was the lowest you could do it at in the previous month. So, you know, you're going to get buying pressure there. So watch the 4-hour structure. It may hold, but I anticipate this could be holding here at the monthly low for at least a rally back up to the 79 level. All right, dollar yen. So I did some analysis on this today. Are we at major support here? Last 3 weeks, we've been holding here. We false broke it last week. Are we putting in a double bottom down here? Now, unlike the dollar index where last week we put in a higher top and then have, yes, moved down to a lower bottom, the dollar yen has moved up to a higher top there and it's had a 62% retracement. All right. You know, we have a day up today, it's going to start putting a higher bottom on the dollar index, sorry, on the dollar yen. Whereas we know the dollar index has moved to a fresh low. So this is definitely showing a lot more strength on the US side versus the yen. On the 4 hour, it's a little choppy range band at the moment. That's the high of yesterday. You know, so a break of yesterday's high is going to turn that 4 hour structure most definitely up. And then you might see the opportunity then to start to look for a 4 hour pullback within a 4 hour uptrend. All right. So that, you know, if we can move up, can we see this kind of scenario where we move up to a higher top now in the 4 hour? We have a 62 or 79% retracement, and we start to develop an uptrend on the 4 hour chart. At the moment, the 4 hour trend there is just mixed. What I am noticing now, as I just look at that 4 hour chart structurally, here's 4 hour support from this area here. We might get a dip down today. You know, the 79% level, last month's low, weekly support. So at the moment, we're holding on these old tops, getting support at 62. We may drop down to 79 if the Fed says something. But at the moment, buyers are coming in where you'd expect them to come in within the structure you're seeing there. An old area where we have a nice strong move up through here. Price has been coming back to kind of fill the majority. There's an imbalance just there. And price has been coming back into it to fill it. So it is starting to show some support there. But structurally at the moment, though, it isn't going anywhere. It's just going sideways. So it's just sitting up on top of an area where you'd expect support to come in. Slav, you're saying inverted head and shoulders there. Are you talking about the dollar? What, is that your comment from the dollar yen? Or was that the previous chart on the CAD? Inverted head and shoulders on the CAD. Let's just quickly go back to that. What time frame? Oh, you're saying, sorry, the Japanese yen. Okay. Back to Japanese yen. Yeah, I mean, yeah, so this is a higher top up here. If it was to come to the 79% level, then you'd have this inverted left shoulder head, right shoulder area. So, you know, if it gets down to the 79 area, buy orders, stop below the low. Or you can wait to see if support holds, starts to hold, then it's time to have a go. You know, difficult to hold the trade, obviously, with the CPI data coming out. But when we're contrasting the pairs at the moment, dollar yen is definitely showing some structural strength forming there. Higher top, potentially forming a higher bottom there, whereas the euro dollar has moved to a fresh high, moving the dollar index to a fresh low. So this isn't painting the same story as what we're seeing with the dollar index and the euro dollar, for sure. So maybe this is getting ready to move up. So watch for that head and shoulders. It could be holding here at the 62 level. Could be dipping down to 79 level. With the CPI data coming out, what we might see, depends where this is come then. We may see like a thrust down here through 130.40 and a false break back up, like we false broke it last week. All right. So it's definitely going to be market driven by the news, but putting the news aside, it is at the moment structurally looking like it's maybe building an uptrend there, but we know what the news has been doing. Anything that you see maybe starting to form a trend, when the news comes out, it just destroys it. So it's not easy at the moment when the market's very much dominated with US dollar news. All right, let's have a look at the final on gold. Now gold, this is the monthly look. We're coming up towards the 62 level. We've got monthly resistance from over here. We're actually at a level of monthly resistance just there at the moment, 1877.18. And Cameron's saying, I was about to do a quicker scalp. Well, at the moment, I think you need to be potentially getting in on a tight entry, getting your risk out, and maybe being out then when the news comes out. Because at the moment, structuring your trade with the trends, whatever, say, day chart trend you're seeing, like last week, you know, for sure, the euro dollar was in a downtrend for sure when we were having the US news come out on Friday. And I was just thinking, well, US news will probably just send it the way the trend that's starting to fall, but no. You get a complete trend change on the day chart. All right, so the gold is heading up there to monthly resistance. Weekly trend is up. It's not, obviously, it's not the best spot at the moment to be a buyer. You know, if you've already bought, great, you're trying to manage your trade. Where it is at the moment is not the best level to be a buyer. You know, we're at one monthly level. There's another monthly level at 1920, got a 62% retracement here at 1896. But the day trend structurally there is just high tops and bottoms. So, you know, we are looking, if you look left, there's lots of tops here at the moment, but it's not showing you at the moment anything to say, sell me. It's just a question of managing any bought position that you're in. That's not, you don't want to be buying at the top of a move. And I don't want to be selling that uptrend at the moment. So you'd have to be looking, now that's the last impulsive move up. You'd have to be monitoring the pullback, looking for a continuation pattern at the moment. Monitoring 62 at 79% retracement. A 79% level is nicely sitting just above last month's high. So you may get support down there on a pullback if it pulls back. So you always want to buy on a nice pullback. So you're going to have to wait for a pullback there at the moment. I'm not going to, you know, they'll buy into resistance. And I don't think there's any shorting there at the moment. It's just in an uptrend. All right, so gold is a little bit overextended. Yeah, you wait for a pullback, in my mind. All right. And what I wanted to show you, you know, Karen, you were talking about scalping, getting a shorter entry. Slavy is saying if the market turns, then gold most probably will follow the trend for the next move down. Yeah, I mean, gold isn't getting into an area there where it could turn, but clearly at the moment, you need to see at least a nice structure change in the 4-hour chart, and we don't have that at the moment. All right, so what I want to show you on the euro dollar. And what I wanted to do was just open up a new chart. And then I've got pivots there on my 50-minute chart, but what I want to show you is much more about just the dealing ranges that we're dealing in at the moment. So pivot points are potential support and resistance levels that can, you know, be support and resistance during the trading day. I've got my pivot points on there, and you can see we're kind of sitting between, we haven't been down yet to the central pivot point exactly, but we're certainly holding at the next pivot above. But what I want to show you really let me just take these pivots off. This is just trying to give you a 5-minute lesson on starting to understand price action on every level. Just taking some of these things off. And putting the support and resistance on all time frames. And I don't need MACD, and I don't need market sessions. All right. So we know we're at weekly resistance, sorry, just there. So when you're asking yourself the question, are we going to hold here and turn around? 4 hour trend is up here at the moment, last level of 4 hour supports here. One-hour chart. So what we're starting to see there is a bit of a range, I would call it a dealing range there on the 1 hour chart, slightly higher bottom, slightly higher top. But what I was watching earlier in the day, and see that monthly level, sorry, that weekly level, 107.36. See how we were, first of all, sitting on top. Then we're starting to sit underneath for quite a while. Now we're maybe starting to sit above. Now what you, in an area like this, when you're trying to work out, are we going to break below this level of resistance to move down? I don't know if it's quite showing that at the moment. It's maybe it was trying to want to, because it formed this area of resistance here, but then we popped above. When we popped above there, that kind of changed that structure a little bit. So what you would like to see here is that if you have a level of major resistance that the market's is trying to move above or below, you know, it might move above, and you'll see some trading like this. For a while. But then it'll break below. And then what you want to see is any rallies start to get capped underneath where the 15-minute lows were. So you start to create a range underneath there for a bit. And then you move down. So it starts to move down in little ranges. Not quite getting that breakdown at the moment. Up here, yeah, we've had that scenario, which is kind of this scenario here. Then that scenario was there. But what we are not getting at the moment is then a further breakdown for a new range like so. At the moment, we might be starting to form a block above, you know, and now we're going to form then another block over here, so on and so forth. All right. So if you're asking yourself the question, are we breaking down yet up here? No, we're not. And market's a bit sideways slow. Yes, the market's waiting for what Powell wants to talk about. And then is what kind of direction is that going to show to the market? All right. All right. So if that's the kind of structure you want to see up here, if we are starting to break down. So we're not breaking down yet. We're just hanging around that area at the moment. All right, any final questions? So we have, yes, a couple of risk events coming out on the news. Powell on midnight speaking. It may obviously drive the market or may not. But the big one will definitely drive the market one way or the other is CPI data coming out on Thursday. The big question will be, obviously, does it drop as anticipated? So the market's probably priced that in. Does it drop even worse, which the market probably hasn't priced in, or does it actually tick up? from what it's expecting. All right, who knows what it's going to be? I mean, I do not potentially know they're still going to raise interest rates by another 50 basis points. Because inflation, you know, even if inflation goes to 6.5, it's way above what their desired, what is it, 2 to 3% window for inflation. It's way, you know, it's way above there. So still anticipating more interest rate hikes. All right, so, you know, be very aware. I'm not going to have anything at risk come 11:30 p.m. Queensland time on Thursday. All right, now coming up tomorrow, I'm going to go through on the webinar front. Lost my page, so I'll just reopen it. I'm going to take you through the monthly and weekly trading ranges. How to look at those. I touched on a couple of pairs a day about the trading ranges on the Aussie yen there for sure. So position trading using the monthly and weekly trading ranges. That's tomorrow. And more analysis on Thursday ahead of that CPI data. All right. So thanks everybody. I don't think there's any more questions there. Thanks, Lav. Keep watching the news. It's very dominant at the moment with the news items coming out. But we keep getting, last week it was starting to look like the US dollar was starting to put a bottom in, but no. Very frustrating. All right, thanks coming in. If you're on our YouTube live stream, thanks very much for tuning in. Other than that, if you want to meet me in the next webinar, just come to our webinar page, register your interest, and I look forward to seeing you all there. Thanks, everybody.